And I said, you know, this country's done a lot for General Motors. You better get back in there soon. That's Ohio. And you better get back in there soon. So we have a lot of pressure on them. You have senators, you have a lot of other people, a lot of pressure. They say
Friday night, slamming the brakes. GM temporarily shuts down an Ontario factory. The hundreds of people being laid off, and why the company says it's not related.
Is adding more cars to its recall heap. This time, about 200,000 older Chevrolet Aveo.
Our top economic story today is the crisis facing General Motors. The American auto giant is dealing with a series of challenges that raise serious questions about its future. In recent months, GM has reported a sharp decline in profits. Quarterly earnings fell by about 1/3 compared to last year. For the largest U.S. automaker, this is an alarming sign. It means less money for new developments and modernization.
Trade tariffs are making the situation worse. Higher duties on steel and imported parts are driving up production costs significantly. Analysts estimate that this adds billions of dollars in extra expenses. That directly impacts car prices for consumers and forces the company to consider spending cuts elsewhere. There have also been factory stoppages. In Missouri, production of Chevrolet and GMC pickup trucks was halted for 3 weeks due to a shortage of parts. For workers, this meant lost shifts and wages. For the company, it meant thousands of vehicles that never rolled off the assembly line. Such disruptions are not new. Similar shutdowns happened during the pandemic when GM lost billions of dollars. Now, history seems to be repeating itself.
Quality issues have only deepened the crisis. General Motors has had to recall hundreds of thousands of vehicles because of risks linked to engine failures. Each recall is not only a blow to the company's reputation, but also a huge financial burden in repairs and customer compensation. Analysts warn that frequent recalls are eroding consumer trust in the brand. The company's bet on electric vehicles has also failed to meet expectations. GM invested heavily in the EV market, but sales have fallen far short of forecasts. Production remains too costly, and consumer demand is still limited. As a result, the company is once again relying heavily on traditional gasoline-powered models. They provide steady income, but they run counter to global trends pushing for greener, more sustainable transportation.
Another major factor in GM's crisis is competition. Tesla continues to dominate the electric vehicle market, setting the pace for innovation and consumer expectations. At the same time, Asian automakers, especially from South Korea, Japan, and increasingly China, are capturing market share with affordable, reliable, and fuel-efficient cars. These competitors are not only challenging GM in traditional markets, but also expanding aggressively into electric vehicles, where GM hoped to build its future. In this environment, General Motors is being forced to cut prices to stay competitive, a move that may attract some buyers in the short term, but steadily reduces profit margins and weakens long-term stability. All of these pressures are not just numbers on a balance sheet. They are affecting ordinary people directly. Car owners in the United States are noticing higher prices for both new vehicles and repairs, stretching household budgets. Factory workers, especially in regions heavily dependent on GM plants, face growing uncertainty about their jobs and wages. Communities built around the auto industry are bracing for difficult times. And on Wall Street, investors are becoming increasingly cautious, pulling back from GM shares and raising doubts about the company's ability to recover quickly.
The crisis at General Motors also highlights a larger trend in the American economy. For decades, the U.S. auto industry has been more than just a business. It has been a symbol of American industrial power and the backbone of the manufacturing sector. Today, however, that legacy is under pressure from global changes, ranging from rapid advances in technology to trade disputes and shifting consumer demands. What is happening at GM is, in many ways, a reflection of how the United States is navigating this new economic reality.
So what comes next for General Motors? In Washington, lawmakers and industry experts are already discussing the possibility of government support for the auto sector. There is precedent. In 2008, U.S. taxpayers helped GM survive bankruptcy through a massive bailout. That intervention saved jobs and stabilized the company, but it also left a lasting debate about whether government should rescue private corporations. Whether there is enough political will and financial capacity for similar action today remains an open and controversial question. For now, General Motors is holding on, but only just. The coming months will be decisive. Will America's largest car maker reinvent itself and emerge stronger, becoming once again a symbol of recovery and resilience? Or will GM go down in history as an example of decline, marking the collapse of an entire era in U.S. automotive dominance? One thing is certain, the story of General Motors is no longer just about cars. It is about the future of American industry, the livelihoods of millions of workers, and the country's ability to adapt in a world where competition has never been tougher. Thank you for joining us. Stay tuned to our channel for continuing coverage of the economy, politics, and global markets.